Hello everyone, I'm Renukanegi from Ajayastromoneyguru, first Astro Finance digital channel, which is first global multi-business language channel. I welcome you all here on 18 January 2022. Today major news are crude oil prices edge lower as Libyan output returns. Chinese demand eyed. Crude oil prices edged lower in relatively quiet trade on Monday against the backdrop of a US holiday and data on Friday suggesting that the market has fully priced in a rebound in demand once the current wave of COVID-19 ends in the northern hemisphere. By 9 a.m. ET, the benchmark US crude futures contract was down 0.2% at $83.11 a barrel, while Brent, the global benchmark, was down 0.3% at $85.78 a barrel. US gasoline futures were likewise down 0.1% at $2.4158 a gallon. Both markers are close to 7-year highs after a vigorous rally in the last couple of weeks, which has been driven largely by fears that the world's biggest oil producers are badly placed to raise output to meet demand from a recovering global economy. The Organization of Petroleum Exporting Countries in particular is struggling to deliver on its promises to raise output due to past underinvestment and poor management, while US shale companies are also more inclined to concentrate on generating cash flow rather than invest in producing more. However, there was sign over the last few days that the rally may have exhausted itself in the near term. Positioning data from the US Commodity Futures Trading Commission show that the ratio of bullish long contracts to bearish short ones is now over 6 times, a level that suggests a rebalancing is due. Only a month ago, that multiple was still less than 4 times. Additionally, at least one of the world's short-term supply problems is easing. Libya, an OPEC member that isn't bound by the current output quota agreement, has now restored its daily production to 1.2 million barrels a day, the national oil company said in a statement on Monday. That's an increase of 5 lakh barrels per day from earlier in the month. Ole Hansen, head of commodity research at Saxo Bank, said via Twitter that technical factors look to be turning against Brent in the short term. A renewed failure to break through the 3-year high of $86.75 a barrel, which was hit in October and again last week, could lead to a correction back to $80, Hansen said via Twitter. Earlier, the market had been left unmoved by figures out of China showing that industrial production had been stronger than expected in December. Attention remains focused for now on China's management of zero COVID strategy, which faces its sternest challenge yet after the discovery of locally transmitted Omicron variant COVID in the capital Beijing. China has typically reacted to any sign of new outbreaks with harsh, demand sapping restrictions on mobility, and failure to control the virus now could have serious implications for the hosting of the Winter Olympics, which being in Beijing in less than a month. So that's all for today's news. Requesting our viewers to kindly subscribe our channel. If you haven't subscribed it yet, press the bell icon so you can get timely updates from us. You can also contact to us on the following number for advanced predictions that you'll be needing on special reports. You can also watch our other videos on stock market, agro commodity, non-agro commodity, agro gene, bullion, gold, etc. So that's all for today's. Thank you for watching. Have a good day.